Insurance business itself started in 1880 by the Oriental Life Insurance, which is the oldest insurance company in this country. Biggest markets that we can ever talk about in terms of equity, in terms of commodities and exchanges. Bombay was the birthplace of insurance company. The insurance companies have got various schemes and policies through which they invest the money taken from the public into the various sectors. IRDA stands for Insurance Regulatory Development Authority. Good morning and welcome to the second session of Principles and Practice in General Insurance. In the last session, we were speaking about the introduction to general insurance, the importance of it, and why general insurance becomes a mandatory part of every business in this world. Now, in this session, we are going to concentrate about the evolution of general insurance. Like every business has a history, even insurance has a very widespread history. So let's go forward, try to understand and explore the history behind the general insurance. Moving forward. Now, the general insurance dates back to 1818. That's quite a time what we are talking about. Saw the advent of life insurance business in India with the establishment of Oriental Life Insurance Company. But this company failed in 1834. In 1829, the Madras Equitable had began the transacting of life insurance business in the Madras Presidency. So general insurance at that point of time was not really the way how it picked up. Why? Because insurance business itself started in 1880 by the Oriental Life Insurance, which is the oldest insurance company in this country. And that's what, the insurance started towards more on coverage of human life, but then people in India were not able to understand the concept of life insurance. And that was one of the reasons why the company failed in the year 1834. Followed by which in 1829, some years back, 5 years back, the Madras Equitable had started with the transaction. Again, they wanted to move into the life insurance business altogether. Now, before we start getting into the evolution part, we need to understand that till many long years in India, the concept of insurance has not been completely understood. People believe that insurance is just a factor of collecting money and we have been just paying money for nothing. Most of them think that insurance is a burden to the business as well as to life. What is going to happen to me? I've been paying my premium year by year and every year it just gets accumulated and we are not going to get any returns out of it. So the first notion among the public needs to be corrected. The need for insurance or the thought process of insurance is not about accumulating your premiums or not about making your life a burden altogether. The concept of premium itself means to say that you are trying to accumulate something to protect yourself in the future. You are trying to pay that premium as a cushion, as a support. So in case if something goes wrong to the entire system, to the entire business at any given point of time, that premium accumulated will help you to come back to life. So that is why I would request each and every one of you, in terms of understanding the insurance, please don't look at it as a burden. Please try to understand the concept of insurance more from a backup standpoint, which will actually help the business and life to sustain for a longer time period. Now, going back into the evolution, we were trying to understand after 1829, let's see the year 1870. Why? Because the enactment of the British Insurance Act, we were still under the British time period, and the last 3 decades of the 19th century, that is Bombay Mutual, Oriental Insurance, Empire of India, were started in Bombay Presidency. No doubts about it. Why? Because Bombay being the financial capital of India, the biggest markets that we can ever talk about in terms of equity, in terms of commodities and exchanges. Bombay was the birthplace of insurance companies. So we started with three companies: the Bombay Mutual in 1871, followed by the Oriental in 1874, which was continued by the Empire of India in 1897. All these insurance companies came under the enactment of the British Insurance Act of 1870. So the Britishers had thought about insurance. They had understood the importance of insurance, and it becomes a sort of mandatory clause that needs to be understood very, very clearly when it comes to that of the insurance business. Now, moving forward, however, that particular era, that particular century was dominated by the foreign insurance offices, which did very good business in India, because India was not known to insurance business. India was not understanding the concept of insurance altogether. So it became very, very important for all of us to understand the growth and development of the insurance factor. Now, after this time, we also started namely the Albert Life Insurance, the Royal Insurance, Liverpool and the London Globe Insurance. Indian offices were coming up in competition in an array altogether. Now, that is very, very important for all of us to know. Why? Because all these insurance were all foreign insurances who had come up in India, who had set up their offices, and they were seeing India as a market of future opportunity and growth altogether. So it becomes highly important at this juncture for each one of us to know and to understand that insurance was picking up in India, and thanks to the British, who had actually laid the foundation for insurance business. Now, moving forward, let's try to understand the evolution of the general insurance. In 1914, the government of India started publishing returns of insurance companies in India. Now, that's a very good act. They wanted to be transparent. They wanted to know to the public that what is happening with this insurance company when they are collecting money, when they are running an organization. So what is the returns that the insurance companies are making in India? So government made a very, very conscious effort of letting know the public of what was happening with this insurance companies. The Indian Life Assurance Companies Act 1912 was the first statutory measure to regulate the life business. So somewhere down the lane, it is always the government that needs to come up with a law or a legal system through which they can go ahead, they can tell the public very clearly that they wanted something which could keep the life insurance business active and regulated altogether. Now, if you go back some 100 years back, India was not only suffering from the rules of the British, but we were also suffering from a very, very inherent problem called as illiteracy, and called as a situation where we were unaware about things that was happening around us. So when these new terms and new business like life insurance, general insurance all started coming inside, people were completely unaware. And secondly, India did not have that much of money what we are seeing today. It was a very poor condition. We were stuck by poverty. We were struggling for our freedom. So many other historical facts to talk about. With all these conditions being there, the government was actually trying to bring in insurance, make it a subject that could be an awareness for all, and tell them how this insurance was an important clause for them to understand and take it forward. Now, an ordinance was issued on 19th January 1956, nationalizing the life insurance sector, and the Life Insurance Corporation came into existence the same year. So now look into it. That was the biggest achievement that India could talk about right after our independence, right after the time when India became a completely republic country. So in the year 1956, on 19th January, LIC, the Life Insurance Corporation of India, the biggest insurance company in our country, came into existence. So that became a formal business, and that became a source of how we started understanding the insurance. Still now, LIC has got a very big presence and it's one of the largest in terms of market share among the Indian people. In 1968, the Insurance Act was amended to regulate the investments and set a minimum solvency margin. The Tariff Advisory Committee was also set up then. Now, if you look into insurance as a business, probably this is one of the profitable business that I could ever talk about. The reason is that every time when insurance companies collect the premium from the public, from their customers, the huge amount of money that is being collected by the organization is again put back into the market or rotated back into the market in terms of investment. They are again put back in terms of the share market, mutual funds, or in various instruments that the companies rotate through. Now, what happens is that the public 90% of the time are not aware about it. They just think that the premium is there and at any point of time they can just claim back their premium. But that is not true. So most of the time, the insurance companies have got various schemes and policies through which they invest the money taken from the public into the various sectors. So that is why the government also came up with an insurance act where they started regulating the factors of investment. They wanted to bring in a scenario. They wanted to amend the entire rule, entire system, where they wanted to go back and tell the companies clearly that whatever you are doing, please be transparent enough and show the margins of your investment that is being done under the various sectors, various acts altogether. In 1972, with the passing of the general insurance business. Now, that is where the general insurance actually came into existence. So you can see the journey from 1818 to 1972. That was a time when we were talking about the Nationalization Act. Now, that was also the period where all the banks were nationalized in India. Until then, we had only private banks. But 1972 onwards, that was a timeline when most of the banks in India were converted into government banks altogether. We got the title as Government of India undertaking. So with that, the general insurance business was also nationalized with the effect of 1st January 1973. So this is a very, very important year, and I would request all of you to please pay attention. Why? Because from 1st January 1973 onwards, the dynamics of insurance business completely changed, and that was a very, very important leap that was taken up by the government in terms of promoting the insurance business, and we got a new wing altogether in terms of the business in moving the insurance forward. Now, to the next slide, when we go about on the evolution, we also need to know the role of IRDA. Let me first tell you what does IRDA stands for. IRDA stands for Insurance Regulatory Development Authority. So like every sector has got a regulator, like how we have SEBI, which stands for Securities Exchange Board of India. Similarly, for the insurance sector, we have the IRDA, which stands for the Insurance Regulatory Development Authority, that opened up the market in August 2000. So pretty much late, of course. Yes, now we have been moving on to the new century altogether with the invitation for application of registrations. Foreign companies were allowed to have an ownership of 26%. So in 2000, we opened up the market. We bought in an FDI in insurance directly with 26% market capacity. But right now, we have seen that it has almost doubled up, and there are a lot of companies which have come with more than 50% holding in India. Followed by, in December 2000, the subsidiaries of a General Insurance Corporation of India was restructured. So the company named as GIC had a complete restructuring altogether as an independent company, and at the same time GIC was converted into a national reinsurer. So it was completely converted as a national reinsurer. Now, when you get a status, something like that as a national reinsurer, it was taken by the government of India as the company for the entire country. Now, if you look at State Bank of India as an example here, that's considered to be the banker to the nation. So similarly, General Insurance Company was considered to be the insurer for the entire nation altogether. So that's how you will see that the emergence of general insurance started building up hope in India. Next, the Parliament passed a bill of delinking the 4 subsidiaries. They wanted to delink it from GIC on July 2002, and today there are 31 general insurance companies, including the ECGC and Agricultural Insurance Corporation. Now, ECGC stands for Export Credit Guarantee Corporation of India. That's an exclusive body which will look into the export affairs and the import factors altogether. Plus, we have the Agricultural Insurance Corporation, the AIC, which is typically looking into the farming, the agriculture business, and 24 life insurance companies which are operating in this country altogether. So now you can see that from just one single company, one single enactment that took place in India, we have moved to almost 36 odd companies in India with having a very, very wide span of business, and each of them concentrating on a particular sector, bringing in their expertise, bringing in their financial acumen, which could actually help the business to move forward. Now, the insurance sector, probably I would like to say, is the most emerging sector apart from the banking and financial services. When you go to IT companies, they talk about a vertical called as BFSI, which stands for Banking, Financial Services, and the last one, I, stands for insurance. So insurance is one of the biggest verticals in the world, which is actually trying to concentrate in terms of the business development, in terms of supporting the majority of business across the globe. Now, the insurance sector is a colossal, and it's growing at a speed, at a rate of 15 to 20% annually. Now you can imagine the size of the business, the speed at which it is growing, and the coverage factors altogether. So that is one of the reasons why many of the foreign companies have picked up stake, and they have started looking into India as a land of opportunity where they could invest into the insurance business. Together with the banking services, insurance service add about 7% to the country's GDP. Needless to say, that is definitely one of the biggest contributors in terms of development, in terms of the services economy that we have been talking about from a GDP standpoint. So in the coming years, you would definitely be able to appreciate and understand the factor that how insurance is actually changing the landscape, changing the dynamics of business which we are entering into and which we are experiencing as a factor of growth. Now, moving forward, the industry structure, how it has been happening in insurance. By 2012, we are talking about the Indian insurance, which is about a $72 billion industry, a very big industry altogether. However, only 2 million people of the total population are covered under Mediclaim. That's quite a sad part. Of course, I would say that today, with a lot of Prime Minister's scheme, the government schemes coming in, we expect at least 1 to 2% of the people getting covered. And with the current situation of the pandemic that came into our country, most of the people have now understood the importance of healthcare. So people have gone ahead and started insuring themselves and the families under this particular act. With more and more private companies in the sector, the situation is expected to change. Now, that is very, very important, and that is quite, interesting for all of us to understand. With a lot of private companies coming into the picture, the situation is expected to change, which means we are talking about the ECGC, the ESIC, the Employee State Insurance Corporation, the Agricultural Insurance Corporation, also to provide insurance for niche markets. Now, what is going to happen in the evolution, in the, I would use the word revolution altogether on the insurance sector is that we are now going to concentrate on niche markets. We are now going to look into sector-wise insurance, which is going to be a very big source of income for our country in the coming years. So starting from agriculture to aviation to probably retail, or you are looking into marine, all these kind of insurance companies are definitely going to make a mark, and we are going to set a big revolution in terms of the insurance industry. Now, we also need to know that these companies, the scope is limited by legislation, but they enjoy certain special powers also. The majority of Western countries have state-run medical system, so they have a less need for medical insurance. Now, when you talk about America, for example, they have their own state-run insurances, so that is not a need for them to worry. So you don't have to think more about the insurance factors there. Now, in case of UK, for example, the corporate cover for employees when added to the individual purchase of coverage gives an approximately 11 to 12% of the population on cover due to largely the usage of financed national health services, because most of the people in UK and in US are still dependent on the government, and the government itself takes in a most advanced system like the National Health Services, which has been providing a complete health insurance package for its employees and for the citizens living in this country. Now, in USA, about 75% of the total population are covered under some insurance scheme. Now, that is a very, very important point for us. Compared to India, USA has got lesser population, but look at the coverage ratio. 75% of the American citizens are already covered under some kind of insurance. The reason being is quite simple, because in America, they believe that insurance is a mandatory thing and they need to take insurance for each and every activity they do. It might be about their motor insurance, it might be about family, it might be about education, or it might be about healthcare. So those countries have spent a lot of time in creating awareness, in making the people believe about the importance of insurance. In India, today we have come up with a lot of schemes, with a lot of pressure and a lot of factors to which we are telling people to start going into the insurance to cover themselves and as well as to protect their families and asset. Now, moving forward, with this, we come to the end of this session. I hope and believe that the session was interesting, useful, and informative. In the next session, we will be talking about the principles of insurance, what are the different forms, factors in which the insurance companies govern. And until then, I believe that this set of information will be of a great help and assist to you. Thank you once again for joining me today on this wonderful session.